Now, again, I told you we could eventually see a pullback. Signals remain bullish, but eventually we could see a pullback. At the bottom, people told me there's no way we're going to rally back up. Person after person after person told me I was calling for that bottom with the tariffs. Everybody else was calling for a Black Monday crash. We're going to get a massive rally. And person after person tell me, no way that's going to happen. Called a lot of names too. Everything I said happened. I was correct. Now, after the market closed, we see Moody's come out, downgrading the U.S., stripping it of its AAA credit rating. It downgraded it by a notch. We've already saw this in 2011 with the S&P credit rating agency. They did it in 2011. We saw it with Fitch in 2023. To a pullback, hopefully we would go make new highs. Likely see this be part of the catalyst for the pullback. Again, I think that we're wrapping up minor wave one. Show you the counts Sunday video. Come back and watch that video. The downgrade will eventually give us the next crisis that we're going to have. It'll be this crisis, not going to be this recession. It's going to be later because of the unsustainable path that we're on with the spending levels in the U.S. It will eventually create a financial crisis, and that's probably going to hit around the early 2030s or so. The next crisis, not this one. The warning sign that it's coming. On an unsustainable path, $7 trillion a year, running a $2 trillion deficit, have deficit spending going on. They need to deal with that, or it's going to create a depression in all likelihood by the early 2030s at some point. Sometime by 2030 to 33, 34, something like that, you're going to see this come down the pike. It's all going to happen. Accounting tricks and postpone it. Interest on the debt every year has now reached $1 trillion. It's unsustainable. We're going to have a crisis. Somebody intervenes. We stop spending more money than we take in. We're taking in $5 trillion a year and we're spending $7 trillion. They were running billion-dollar deficits. Then it went to trillion-dollar deficits. Now it's $2 trillion deficits every year. Stop that. You're going to have a crisis. It's not rocket science. Do the math. We're on an unsustainable path. So again, this could rattle markets for a little while. We saw it with Fitch. Downgrade the things. Let's take a look at what happened. Fitch did it. When we had the Fitch downgrade in 2023, it was August 1st, 2023. The very next day, we had that gap lower on August 2nd, and we ended up getting this sell-off. It wasn't just about Fitch. It was Fitch downgrade. It was a tech sell-off. There were concerns about the banks with rising yields, the Fed continuing to tell us rates higher for longer, all the tightening of financial conditions at that time. So there were other factors. But again, as I'm saying, I get a pullback. Maybe the Moody's downgrade kicks it off. Be watching until after the markets were closed on Friday to do the downgrade. So we'll be watching what happens on Monday for the next few weeks. Probably going to get a pullback for a couple weeks. And again, my next video, Sunday, you'll see, I think we're wrapping up minor wave one, or maybe it goes a little higher and we wrap it up. Not with this announcement. We'll be watching. Back on Sunday, I'll show you the counts. There's concerns about the downgrade back then too, but eventually this happened and the correction ended. I think we're going to get a pullback, then go make new highs. Eventually the market will shrug it off. Now, do you remember back at the bottom when I showed you, remember that Friday on the 4th, Kramer was predicting the crash? I told you that the fear greed index at that time was at a reading of 4. Talked about it after that. It hit a reading of 5 the day the market bottomed, and then Monday we were supposed to have the Black Monday crash, and then on Tuesday it hit a reading even lower. It hit 3. And again, I talked about all this into that week of the launch of the tariffs, that the tariffs would mark a bottom. Week thereof, we ever got the rally back up there on the day of the launch, which was the 9th. Again, you had all these signals. Now we're at a reading of greed at 71. Back when I was talking to you about all these bottoming signals, and we Market breadth indicators. We talked about sentiment. We talked about the fear greed index here. And again, had that reading of 4. Then we went to 5. Then we dipped down to 3 just before the big rally, just before the launch of the tariffs. Told you again, it was marking a bottom. But it believes that we're going to crash and have a Black Monday style crash. Opposite is going to occur. Opposite did take place, and we've had this big surge. We've gone from extreme fear to now back to greed. And again, sentiment is changing. We got the rally of hope I predicted. Things I told you about the tariffs and I predicted would happen have come to pass. Spot on. Everything I told you has happened. Everything the media has told us, the opposite has happened. Everything the bears told us, the opposite has happened. The bears told us we were going to crash. We got a bottom. The bears told us we were going to crash. The way we were going to rally back up, I told you we were going to get a massive rally. And what did we have? We had a massive rally with historical moves. Second best move on the S&P in history. Then the record-breaking winning streak, the best winning streak in 20 years. Oh, this wasn't supposed to happen. But again, I told you back at the bottom that it would. How do you understand why I was trying to tell you this? It's because we were seeing extremes. We moved into major support, horizontal support on the weekly chart I talked about on the NASDAQ and the S&P. I talked about this diversions back at the time. Again, now we're back up at areas of risk. Again, we're going to get some kind of pullback, whether mild, medium, or massive pullback, whatever the case may be. We'll be watching the Fibonacci's, but we're back up at extremes now. Bullish divergence down here at extremes gave us this rally that we were told wasn't going to happen. I warned you at the bottom that these signals were at extremes. Up here at extremes. So again, likely going to see a pullback. Now maybe we take our time doing it. My signals are still bullish, but we're going to get some kind of pullback. I think that could happen very soon, and we could see a resetting. They're getting the bottom and the massive rally. S&P 23%, about 6 weeks or so. Back up about 30%. Rally we were told that we weren't going to have. And I expect that pullback is going to happen. Same thing with the NASDAQ. Again, we reached extremes. Created a bottom, had a massive rally back up. Now we're coming back up to extremes. Again, we've rallied about 30% or so. At some point, we're going to get a pullback. I believe will give us a higher low. Bears will start telling us we're going to crash again, like they did at the bottom. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. Take a moment to do that. I would really appreciate it. If you have any sponsors, just ask that you do what you can to help out. If you could take a moment to do that, I would really appreciate it. I know you want this information, that you like this information. Follow the link below to take you to a secured site. You can donate any amount you want. If you do that, thank you. And you can also make it a recurring donation. If you do that, I thank you. Thank you for your consideration for that. I told you at the bottom, we had moved into extremes, and I told you it could be something like what we had over here in 2023 to deeper extremes, and then we turned right back up. And that was the end of it. That ended up marking the bottom in 2023. That's exactly what we had here in 2025. The S&P trend direction. I told you that with moving into the negative region, stay there. Well, we didn't. Bottomed out a week and a half later, we moved back into the positive region, and we had that powerful rally lows. When we had the S&P peak in 2022, we moved into the negative region with negative diversions, and then we stayed there. We do that here. We had something like what we had over here in 2023, where we moved into the negative region, and then we recovered. Again, in order to have a bear market, you got to go down and you got to take out the 200-week moving average, as I've talked about. You got to go down and you got to take out the 50-month moving average, as I've talked about. Stay below those levels and then have the S&P trend direction move into the negative territory and stay there. Additionally, we had the volatility oscillator for the S&P 500 popped above the signal line, and then that was it. It turned right back down. We got that bottom in the market on April 7th. And a half later, we're dropping back down below the signal line, getting right back up above the in the positive region for the trend direction. The pullback, I'll be watching to see if the trend direction remains in the positive region. My guess is it's going to. We're going to resume the advance and likely go make new highs. We get a short-term peak in and begin to pull back. A bigger sell-off, like up here, here's the S&P. When it was declining, we got above the signal line for volatility and it stayed above there. Volatility was elevated and it remained above there, above that signal line. The S&P trend remained negative. We didn't have that happen here. And that's why I was telling you down at the bottom that we were likely going to see something very similar to this. Volatility dropping back below the signal line, marking a bottom like we had in 2023. I told you I thought we were getting this for 2023 rather than this like what we had in 2022. At the bottom, we saw the 5-day moving average of the put-to-call ratio up at extremes. We saw the McClellan summation index down here at extremes. Down at the bottom, I talked about market breadth indicators being at extremes. Remember when we reached single digits with stocks above their 20-day moving average on the S&P 500? Now we're up here at extremes. Okay, so what do you think is going to likely happen? At some point, you're going to see a pullback, and we're likely going to fill the gap that we had from this week. Be a bigger retracement. We'll be watching. We're down here in single digits when we're being told that we were about to have the Black Monday crash. And then everybody repeated it. Talked about and going into launch of the tariffs and the week of the tariffs, and before we ever had the launch of the tariffs and had them immediately paused, I talked about all the bottoming signals. I told you if everybody's expecting a crash, we're going to bottom. And I was talking about the tariffs being a buy the news event. It was. Same thing here for the NASDAQ. Stocks above their 20-day moving average on the NASDAQ. We reached single digits. Now we're back up at extremes and we're forming a divergence. It may not be done yet. Again, my signals are still bearish, or still bullish, pardon me. Signals are still bullish, but at some point we're going to get a pullback. We've had a powerful move. Guess is you're going to come back and fill the gap, and we'll be looking at the Fibonacci retracements. But again, down here at these extremes, everybody was calling for the crash. And this is what I was pointing out at the time, that we had at deep extremes. Sentiment was so bearish, everybody was convinced we were about to have a Black Monday crash in 1987. Complete opposite happened to what the herd believed. The herd didn't believe that back up at the top. Piling in at the top. They love to buy tops and sell bottoms. They panic sell. We love it. They panic sell, then we go the other direction. Lesson. Do the opposite of what the herd does. I'm telling you about all these bottoming signals that were happening into the week of the tariffs and the week of the launch of the tariffs. People get so bearish at bottoms, they don't believe, market could rally back up. At the tops, they don't believe it can go down, and at the bottoms, they don't believe it can go up. It's absolutely incredible. People are guided by their emotions, and that's why the herd is always wrong. I told you we were not going to get a Black Monday crash, that we were going to get a bottom and a massive rally would follow. I told you we were going to get a pause or a reduction or both with the tariffs. There was going to be a rally of hope. Oh, what happened? We got a bottom and a rally of hope. Exactly what I said would happen. The tariffs were going to come in, economy was going to collapse, and the stock market was going to crash. Opposite happened. The tariffs were paused and reduced. We were going to get retaliatory tariffs and have a massive trade war. They were delayed so negotiations could happen. We were told that no countries were going to negotiate and that we're just going to have this collapse with the tariffs. I told you, you got to be pretty naive to believe that. The media told us what happened. They were going to negotiate. What happened? They came and they're standing in line to negotiate. We're going to be having all kinds of deals being announced. We've already had some. UK. This escalation day with China. Then we were told that China wasn't going to back down and we were just going to have this massive trade war with China. I told you we were going to have de-escalation day. Who was right? I was right. Everything I've told you has been absolutely 100% correct. Everything the media has said and the bears have said have been absolutely 100% wrong. We're going to get a sell-off and the bears are going to start screaming. And I told you, predicted down over here, they're going to start screaming, and they've been screaming it all the way up. Market rally, the rally the rally 30% lower that they told us we were not going to have, that we were going to have a crash. Remember that? Now they're going to start yelling it again. We're going to set up a higher low, and then we're going to go take out the highs. The bears will end up throwing in the towel at much, much higher levels. First short squeeze, we're going to pull back, and then we're going to get a much bigger one. I'm telling you, at some point in the near future, we're going to get a pullback. Hope you're listening, because the rally I predicted is going to come to a conclusion at some point in the near future. Could be next week that we peak and start a reversal. Start seeing evidence of a shift in momentum. We're not there yet. We're seeing extremes and things like this with divergences with stocks above their 20-day moving average. Same thing with stocks above their 50-day moving average here for the NASDAQ. Again, down here at extremes, single digits. Again, we're now pushing back up to extremes. We can get a pullback for a wave 2, or as I've said, if this is not wave 1, if this is a parabolic 3 right here, then we can get a pullback for 4 and then go on 5 and end up seeing a divergence develop before we get a more meaningful pullback. Either one of those scenarios is possible. Bears are telling us, oh, we're about to have this massive collapse. You don't understand. This is wave A and this is wave B and we're going to get wave C. As what I could tell you is right below where we're at is the 200-week moving averages. And if we take those out, it's over. If you're telling me we have an A, B, and C or a WXY, that's still corrective. That still means we're going to new highs. This is a 3-leg push down. I think that's the bottom. Bears needed a 5-leg push down. They didn't get it. Even if you say, well, this is an A and a B, W and an X. Well, again, the next move would be a C or a Y. Have the 200 period directly below. I think the low is going to hold myself, but again, have a problem. It's still a corrective pattern. It still means you're going to new highs. That's the problem for the bearish case. This is corrective, as I've said. I told you I didn't think we'd get a 5-leg push lower, and I think it's over. Talked about extreme readings on signals down at the bottom. Everybody else was running around with their hair on fire telling us that we were going to have Monday style crash and repeating what Kramer said. Kramer has changed. Jobs report earlier in the month, and he said, oh no, this proves we're not going to have a recession now in 2025. Bird is starting to pile on a little bit with that. You're going to see a lot after we get the next pullback and then we start rising back up. Bird is going to be repeating what Kramer is saying. Some of them are already starting to. Watch the recession, all the things, because I believed the media's lie that we were going to have the tariffs collapse the economy. And by the way, recession, the tariffs, we were supposed to get this massive inflation. Inflation has dropped. I don't know if you've noticed that. I'm telling you, inflation is going to go higher. It usually does right before the recession. Be a scare about that again, starts ticking back up. That could be one of the catalysts, but we're going to have a deflationary bust that will deal with it. I'm telling you, look, we're coming back up here to the extremes. I think you're going to end up seeing a massive divergence develop here over time that will carry us much, much higher. Like we had over here. We had extremes reached and we saw the pullbacks with extremes, but we ended up, going much higher. We saw these pullbacks along the way. And in this run right here, you'll eventually see something like this where we get a massive divergence develop here, push on into the summer or fall over the next few months. This one right here took about 4 months, 3 or 4 months or so. I think you'll see something very similar to that. I expect that we're going to get a pullback, but I believe see a higher low set up. Stocks above their 50-day moving average on the S&P 500. Again, the bottom when everybody was telling us we were going to crash, we are at single digits. Again, I talked about the extremes on indicators bottom. That was one of the reasons why I believed that we were going to bottom. Counting the tariffs. It was a buy the news event. Moved back up, and we off of the single digits. Now we're back up here, double digits here. 79, just under 80, back up at extremes. At some point, you're going to see a pullback on the S&P 500, but you're likely going to see brand new divergences. The fact that we're reaching extremes here with no diversions in place is likely suggesting, with stocks above their 50-day moving average, is likely that over the next couple of months, we're likely going to see divergences develop, like what we had over here. Building upon that over here, or back over here, and then building upon it here. We're going to see a divergence, much like these divergences that will develop over the next 3 or 4 months. I think this is suggesting we're going to get a pullback because we are coming up here to extremes. At some point very soon, we're going to get a pullback, which I believe will be minor wave 2. Pullback will be a subwave for 4 in the larger minor wave 1. Minor wave 1 does not complete, and we have a parabolic wave 3 on our hands, which is very possible. He's suggesting a much bigger move side for the blow off top that I keep talking about. It's going to be a powerful move. Everybody's saying, oh, we're going to crash and this rally's never going to happen. I'm telling you, we're going to have this final phase of the blow off top. Take all these people out, have total complacency back up at the top, and we could go up to 67, 6,800 before all of this is done, and it can happen quickly. We're going to get these tax cuts. Right now, just had the tax cut bill failed to move forward after a committee vote. And again, be some uncertainty surrounding this, but eventually you're going to see this spark a rally, the largest tax cut in history. The 2017 tax cuts and all the other new tax cuts, start to see deals announced, tariff deals announced, more and more deals. Have the pause with China. We have the other pause with the other countries can be extended. This is likely going to go on into the summer, into the fall maybe. Could be other bumps along the way with it, especially with China. I'm telling you, bearish sentiment is beginning to ease, as I predicted it would. A massive rally of hope I predicted. A bottom I predicted. Thing I've said it's going to happen with the tariffs, I was correct. This rally going into the summer. See more concerns later on as move into the summer with China. See other countries and other deals announced. See tensions in the Middle East heat up. The U.S. is trying to get a deal to deal with Iran's nuclear threat. I don't think they're going to be successful. Now, it just said, oh, we're close to a deal. It's a tactic to drag out negotiations. Oh, and then no, we're not. We're going to back away. And then, oh, okay, we'll come to, okay. And there'll be this give and take. Finally, the Trump administration will throw up their hands in despair, end up having to do a military strike. It's going to happen. They'll be successful. See Iran giving up their nuclear ambitions. For nuclear energy. Really? Then why are they building nuclear site 350 feet underground, cemented in? They're creating long-range missiles to put a nuclear warhead on it. Some people are just very, very naive. The United States does not act. Iran will have a nuclear weapon in 2026. It's going to happen. I told you in 2024, and I told you earlier this year, they have to do it this year. That's going to happen sometime between July and September, possibly as late as October, but I think it's more likely in the summer there or the very early fall. The market's going to rally up powerfully until then, pull back, and it's going to continue to go higher. I think that is going to rattle the markets. Why will that rattle the markets? Because there'll be concerns about a regional war, concerns about World War III and all the other things. It's going to rattle markets, rattle Bitcoin too. Until then, I'm extremely bullish, and we're going to go higher. Phase of the blow-off top. And I'm just telling you, not going to believe that is going to happen either. Just like they didn't believe me that China would come to the negotiating table. Just like they didn't believe me we weren't going to have a Black Monday crash, and that they didn't believe me. We get the rally of hope. Everything I've said has happened. Absolutely incredible. Telling you the things that happen before they happen that I see that the market is going to begin to price in. Pricing in the rally of hope. Pricing in the tax cuts. It's going to price in the recession, and it's going to top. That's coming. We saw stocks above their 200-day moving average on the S&P 500 reach extremes, as we've seen at other bottoms. 2020 bottom, the 2022 bottom, the 2023 bottom, and then now. We're going to come up here and build upon this previous diversions over time here, over the next several months. Seeing these extremes likely mark the bottom, as I've said at the time. Put to call ratio, reach extremes at the bottom. I talked about this. And again, other bottoms were marked by extremes. We're coming back down here to extremes. You got the 5-day moving average at the put to call ratio down here at extremes. We just reached an extreme here with the raw data. Here again, you're likely going to see a peak very soon, a pullback. Looking at this poll that Charlie posted, again, poll back before the launch of the tariffs, after we bottomed on April 7, will the U.S. economy fall into recession in 2025? This is 14,000 people responded, over 14,000 people. Yes, we're going to have one. 66.9%, 33%, 33.1% no. The herd, basing everything on their emotions and their feelings. Same poll this week on May 14th. Will the U.S. economy fall into recession in 2025? No, 63.1%. Yes, 36.9%. At the bottom, the herd, very bearish. We're going to have a Black Monday crash, and we're going to have recession, and we're all going to die. We have the rally back up. NASDAQ's up 30%. S&P's up 23%. Bitcoin's up 42%. Recession? Nah. And look at how many people responded. About half. Over half. Concerned here and interested that we're recovering. You see, they base everything on their emotions. You want to do the opposite of what the herd does. They love buying tops and they panic sell at bottoms. That's what they do.